Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. In today's video, I'm going to cover Bitcoin in the usual way in the short, medium and long term, as well as look at the altcoins. I've had a lot of requests for altcoins in the last few weeks. I'll go through them today, and obviously then I won't have time to do a Wisdom Bite, so we'll leave that until next week. And because we're coming to the end of the bull cycle very, very shortly, I think it's better to focus more at the moment on the altcoins as well as the Bitcoin. But if you are missing some of the wisdom bites, then please refer to some of my previous videos where I've covered a lot of wisdom bite sections at the end of each of my videos. And it's always worth going through some of the previous wisdom bites to learn the personal development side of things. And please remember, all my videos are for educational purposes only. Nothing in any of my videos should be taken as financial advice. So I always urge my subscribers to do your wider research before making any investment decisions. So with that out of the way, it's Sunday. It's time to put everything down, eyes on the screen. Let's get cracking. But before I begin, I want to give a very big thank you to one of the other YouTube channels who recommended my previous video, which I did on the Wisdom Bite section, covering why the rich get richer and the poor remain poorer. The channel I'm referring to is Coins Kid here, and this is the Wisdom Bite section that I did about the rich getting richer and the poor getting poorer and why that's the case. I did go and check his channel out, and I was very impressed with some of the altcoins that he was covering on here. So if you are looking for an in-depth analysis on altcoins, then please do go and check out his channel. Okay, so coming back to Bitcoin, I showed you this chart many weeks ago, and the reason why I want to show you this chart today is because quite a number of people seem to be panicking that because November hasn't gone according to what the previous cycles have shown us, i.e. to have a big run up and a big rally in November, people are questioning whether we've actually topped out. At the end of the day, we don't really want to give our own opinions based on our gut feeling or what we feel or what we think. As you know, on this channel, we always refer back to the charts. And when you're in doubt, always zoom out on the charts, on the larger time frames. And on the monthly chart here, I think I showed you this chart on the daily time frame in previous weeks, but this time I thought I'll show you a much clearer picture on the monthly chart. It still follows the same principle, and that is that we've had two previous cycles and we're currently in the third cycle. The first cycle culminated in the blow-off top in November 2013, the second one in December 2017, and we're currently waiting for a blow-off top here either in November or December. However, as you can see with the overall bigger picture, there's a certain pattern that has been following Bitcoin since its inception here back in 2009-2010, and that is that these pink vertical lines are the halvings that we've had. The first one back in November 2012, the second one in July 2016, and the third one last year in May 2020. And when you look at that pattern, it tells you that should this pattern follow in the current cycle, then we can deduce from that where we're actually heading in the next few weeks and months. So basically the pattern has been following that once we got the peak here, we had a bear market, then we had a run up towards the neckline of this peak, but before that we had the halving. And once we broke out, we had one major correction here before the blow off top. And this pattern of a peak, bear market, halving, breaking the neckline, a correction, and then the blow off top has been following in the last two cycles as well. So when we got the blow off top here at the end of the first cycle, we had our bear market, we had the run up here, the halving in between before the neckline at this level here. And when we broke up, we had our correction before the blow-off top in December 2017. So therefore, two cycles were going parallel with each other. And currently, it's exactly the same. So we had our blow-off top in December 2017, the bear market, a run-up, but before it came to the breaking of the neckline, we had our halving here. And since then, just like back here and back here, a correction here. So there is no difference between the current cycle to the previous cycle or the cycle before that. So if you're having any doubts about this current cycle, then this chart on the monthly time frame would suggest otherwise. So for me, unless something very drastic happens, that we have a massive fall here, then the current cycle is absolutely on track with the other previous two cycles that we had. The way I see it is that we wouldn't be spending 6 months consolidating with this particular consolidation pattern just to top out at the 69,000 level, because if we were going to have a bear market, we would have gone further down by now and broken some of the key support levels, and we haven't done that. And the main support level that I'm talking about is the $30,000 mark, which I'll go through later on in the video. So this chart tells me there is nothing absolutely to worry about, and we're still on track for a blow off top, maybe not in November, but maybe in December, but we're very close to the blow off top. And the last thing we want to do is lose patience with what's happening. Please remember, in these markets, those who can hold their nerve, those who can be patient, are the ones who will be rewarded. And those who lose the patience will be kicking themselves later on. And as I've said many times, money moves from impatient hands to patient hands. If you're still unsure whether we're still in a bull market or not, the indicator that always tells you that is the 21 weekly exponential moving average. And as you can see, in all bull markets, the yellow line here, the 21 weekly exponential moving average, whenever we're in the bull market, the price always seem to remain above this level. Yes, we come back and find support on it. And same here, since we started this bull market last year, we've just basically been bouncing off it and remaining above it until we broke down and created this consolidation pattern. But since we've been back above it here, as you can see, we're still finding support on it. As you can see, the recent pullback that we've had came back and found support right on the 21 weekly exponential moving average, which is currently at about 55,700. And the good thing is that we've had a nice bounce from that level to where we are currently at around about 58,000. It doesn't mean that it won't fall below. We could still wick down to the 52, 53,000 level and then find support back above it at the end of the week. That is still on the table. But currently, as we are now, we're well above the 21 weekly exponential moving average. And if you want further proof, then you only have to look at the RSI on the weekly chart. And clearly, we're making higher lows here, certainly, and higher highs. So the trend on the RSI is certainly on the upside. So what I can see on the chart, if we look at the weekly time frame, this is the pattern that we seem to be waiting to be breaking out from, and this is the resistance line from the December 2017 blow off top at 20,000. And if we take the line from the COVID-19 line here, then from this pattern we're waiting to break out either at the top side or the bottom side. And the bottom side is currently around about the 40,000. And I've mentioned many times before, this would be my red line in the sand. If we break the 40,000 to the downside, then there's no telling where it could go to. I would then basically sell up around these levels here, below the 40,000. As I've shown you with the cycles chart earlier on, the whole thing is playing out to break out at the top side for a blow off top anywhere around here. We'll just have to wait and see. And if we have a look at the simple moving averages, we can see quite clearly that they're all lining up in the right order, with the lowest one, i.e. the 20 simple moving average, above the 50, above the 100, and above the 200 here. And they're all pointing in the upward direction, which tells me we're still in the middle of the bull market. So nothing to worry about there. In the current price action, if we have a look at the weekly chart, we can see quite clearly there are three major levels on this chart. The first one is the bodies of the candles over here, which we broke out with this candle here. That was confirmed by this candle the following week, which was last week. And currently, we've just been rejected by this red candle over here. Certainly, I wasn't expecting it to come back down to the $58,000 mark. But this is Bitcoin, it can do anything. But the main thing is to realize that these things will happen. And as I've shown you with all the other indicators, the bull market trend is still to the upside. And that these little pullbacks, yes, they're 20%, but in the realm of Bitcoin pullbacks, this is just normal. So whilst we were not expecting the price to come back down to these levels, and I did mention the next level to look out for was obviously this $52,000, $53,000 mark. And the final level is obviously this support levels that we got down here. So these are the three critical levels that will determine where this market is going. As I said last week, I wasn't expecting it to come back down to the $58,000 mark, but because we've actually gone below the 58,000, certainly there is a much higher probability that we will come back to the $53,000 mark here before we find support to go back to the upside. Obviously that doesn't have to happen, but certainly with this red candle coming down below the 58,000, and if we close this candle at the end of tonight at 12 o'clock midnight UK time, then the probability is much higher to come back down to the 52, 53. If we can muster some support above the 58, 59 and close above that, that will reduce the probability of it coming back down to the 52, 53 level. So we'll just have to wait and see. But as long-term holders, we're not going to be panicking. We can see quite clearly where the market is. And those who are patient will be well rewarded from what I can see in the charts here. The current decline that we've had from the 69,000 high that we made here down to the bottom of the wick is around about 20%. And for Bitcoin, that's nothing. That's just a normal pullback. And even if we pulled back to the $52,000, $53,000 mark, that would only represent around about the 24, 25% mark, which again, in the realms of Bitcoin and its history of pullbacks, that is well within the norm. If we zoom out a little bit, we can see quite clearly with Bitcoin something that we must understand, and that is that in every cycle, and the current cycle is very similar to the previous two cycles, that we always have a rally, a pullback, a rally, a pullback, a rally, a pullback, a rally. And this pattern is really what we call mini cycles within the major cycle. So if you have a look from here, when we reached the bottom in 2018, again, we had an up cycle, then we had a down cycle, and another up cycle, then another down cycle. So you can see that we have series of cycles all along the Bitcoin history chart. So currently we can see quite clearly that we had this cycle here, and all mini cycles have a downtrend before they make up for the next cycle. So it may well be that we're having a little mini cycle downtrend here before we go to the top side. So let's wait and see what happens, but please keep all these things in mind. Don't get swayed by the emotions that I keep seeing on a lot of the other YouTube channels where people seem to be panicking that this little pullback here is something to be worried about. As I've shown you on these charts, there isn't anything really to be worried about. The time to worry would be if we break this level here at 52.53. I would get concerned a little bit about that, but certainly I wouldn't be making any major decisions until we break this level here at around the $39,000, $40,000 mark. And like I've said, patience will be very well rewarded, but it's a very rare commodity, especially in a bull market. And if we put on the chart the Fibonacci moving averages, which I showed you last week, which is namely the blue line here, which is the 8 exponential moving average on the weekly chart. The yellow one is the 21 exponential moving average, and the white one is the 34 exponential moving average. And the reason why we use these averages is simply because they are the Fibonacci numbers, and Bitcoin has a very high affinity to Fibonacci levels. Currently, Bitcoin is holding right on the 8 exponential moving average, and it bounced off that 21 weekly exponential moving average. And if we were to go lower to the 34 exponential moving average, I'm not expecting that, but certainly we've been back there before where we bounced off, and that level currently is around about the $48,000 mark here. But the fact that it's holding the 8 exponential moving average is a bullish sign that maybe we'll bounce off from these levels here. But certainly we can't rule out the $52, $53 mark. Moving on to the daily chart, what I can see what's happening here is that we've had this little pullback down here, and we're now having a quick upward rally. All I can see is that we're going to get rejected anywhere around the $60,000 mark before we come back maybe to the $57,000, $58,000 mark and create a double bottom before we move to the upside. So we then create this W pattern here. So it looks to me as though we may have one more leg to come back down in the next few days before we move on and create that double bottom. So let's wait and see. The way the market is developing here, it's looking increasingly unlikely that we're going to have a blow off top in November. But with Bitcoin, anything can happen. In a period of 2 weeks, we can go up 100%. That wouldn't be unprecedented for Bitcoin. Before we do some analysis on some of the altcoins, let me show you the total altcoin market cap. So on the weekly chart, we can see that we topped out around here at these levels at around about 1.3 trillion before we had this cup and then the handle pattern that we've made over here, which looked extremely bullish. and we broke out in this upward rally that we've had recently. And as you can see with the current candle, we've come back and found support on exactly the same level here as in May this year. So this is looking incredibly bullish that we're now just breaking out from this level here. That doesn't mean it's going to take off straight away, of course not. I'm expecting Bitcoin first to lead the way, and when Bitcoin comes to a breather, that's when I'm expecting the altcoins to start taking off. But it's really a guessing game, and it's not something that I play with. I'm just a long-term holder, and I stick to those guns. But certainly the total market cap for altcoins is looking extremely bullish, as you can see from this chart. And if you include Bitcoin in the total market cap, a similar picture here as well. You've got your cup and handle. We broke out in this rally here, and we've just come back down to support at these same levels as back in April, May. So once again, the whole charts are looking extremely bullish with a launch pad here to take off much further up. Before I go into the altcoins, I'm going to just show you one of the exit indicators. As I've been showing you over the last many weeks, we have a number of exit indicators, about 4 or 5, which when they come together and tell us the same message that we are now topping out, then we know that we've now come to the point where we need to sell out and get out of the market. And the main one I've been looking at is the pi cycle, but obviously we've got the other ones and I haven't got time to show all of them today. But as we can see, the red line is moving sharply up towards the green line. So hopefully in the next 6 to 8 weeks, when the price does go into a blow off top mode here, this red line will come very sharply up to meet the green line here. And when that crosses, then we'll get out. So obviously that hasn't happened. So we're nowhere near the blow off top at the moment. And I'll go through some of the exit indicators in my next video. Okay, in the last few weeks, I've been covering the Bitcoin miners, mainly Marathon and Riot, as my main Bitcoin miners on the technical analysis. Today, I'm going to have a look at 3 others, which I haven't mentioned in the past, I think apart from HIVE. This is the HIVE blockchain. And if we'll have a look at the overall bigger picture view, you'll see that these are all now coming to a point where they're about to launch into the major parabolic phase. So as we can see, the market for HIVE back in 2017 actually topped out at this level here. And if you take that level across, look where we are now. So on a bigger picture, what we've really got is a cup and handle pattern here. And we're now coming back up to the same neckline that we've had previously at these points. I'm expecting the price for HIVE to come up to this neckline, and once it's broken in the next few weeks, we're going to have an explosion of the HIVE blockchain price. The levels I'm expecting for it to go, if we take it from the bottom of the cycle here to the recent high back at about 7.5 to this level here at the bottom, I am expecting anywhere around here as a reasonable blow off top price of around about 28 to 32. And because we know the Bitcoin miners have a exponential factor, it may well be that we go much higher than that. But certainly I would be expecting around about the $30 blow off top level. The reason why I like HIVE blockchain is because they mine Ethereum as well. So they basically have both the Bitcoin mining component as well as the Ethereum component. And that makes them a very strong play. And if we put on the Fibonacci moving averages here, you can see quite clearly the 8 above the 21 and above the 34. And bounced off very strongly. So that tells you that any fall is being bought up very quickly here. So there's a lot of bullish momentum in this price currently. And these levels may well be very good opportunities to dollar cost average into this asset. And if we have a look at the simple moving averages of the 21, the 50, the 100 and the 200, again, they're lining up in the right order, pointing in the right direction, and the price action is well above these averages. So the momentum is very healthy for HIVE blockchain. Okay, so the next one I want to have a look at is the Bitfarms. And as you can see on this weekly chart, we've got the similar neckline as we had with HIVE blockchain. And this chart for Bitfarms is showing a bit more bullishness than HIVE blockchain because we've actually broken this neckline that we had here and gone above it. So we're just waiting for a bounce from this support line to the upside. But it's interesting that we made this cup and handle again here, came back to the neckline, and now broken up. So obviously this is a little bit more advanced than HIVE blockchain. As you can see with the Fibonacci EMA levels, the 8, the 21 and the 34, the price action is well above it, so it's looking very bullish. And the simple moving average is again aligning up nicely. The 20, the 50 and the 100. The price action is well above that. So it's all looking good for Bitfarms. And if we have a look at HUT8, they're a reminder of Bitcoin as well as Ethereum. Again, we had this neckline where it came up and topped out in February before we had this decline. So if you take this neckline here, we can see quite clearly yet another cup and handle pattern here. And it's come up to the neckline. And the beauty about this chart is that we've actually broken through the neckline here and then come back and now using it as support. So this could now be absolutely ripe to go to the higher levels. So this could be a great opportunity to buy in at HUT8. This is not financial advice. Please do your wider research. I'm only telling you what I see in the charts here. And if we put the 3 Fibonacci levels on here, the 8, the 21 and the 34, once again, it's come back as support on the 8 exponential moving average. And all three are lining up in the right order. And the simple moving average is the 20, the 50 and the 100. Again, all lining in the right direction, all pointing up with the price action above it. So all looking very bullish. Moving on to one of the other requests, and that's XRP. The main level to look out for is this blow off top that we had in January 2018. So we're currently waiting for the SEC ruling to actually rule in XRP's favor. And if that happens, then I can expect the XRP price to move out of this triangular pattern that it has created since bottoming out at the beginning of this year. Here, as we can see, we're coming to the end of this apex here, and I'm expecting a breakout at this point. If the SEC ruling goes in favor, which is what I'm expecting, then it will break up very strongly to the upside here. And the question is, will it go well above the previous all-time high of around about $3.50? Only time will tell. If you have a closer look, it's actually broken the 8 exponential moving average as well as the 21 exponential moving average. So there's quite a lot of weakness in the XR price currently. That doesn't mean that it won't break up to the upside, but certainly at the moment it looks like other assets may be more attractive. However, if you're holding XRP, I would tend to hold until the SEC ruling, which majority of people are expecting the ruling to be in its favor, which would actually give a good boost to the price. Obviously, that's not financial advice, but you have to do what you have to do. But that's how I see the charts. It's looking weak at the moment, but it's coming to the apex. We're going to have to break out sooner or later in this area. But certainly the Fibonacci levels are showing signs of weakness here currently. And if we're looking for a blow-off top price for XRP, if we take it from the previous high here in 2018 to the bottom of the cycle here, at around about 11 cents, we should see a price anywhere between the $13 to the $15 mark here. That's obviously depending on the SEC ruling coming down in its favor. A quick look at Solana. This looks like an incredible chart. We've had bullish momentum here since going back to June 2020. And I do like the look of this because if you look at these levels, it's playing out very well to these levels. Look at this. So we can see quite clearly it's following a path of creating a U-shaped pattern here, breaking the neckline and going to make new highs. Creating another U-shaped pattern, breaking the neckline, going back to new highs. And currently it's doing exactly the same here. So we've got this U-shaped pattern here. We've come back as support. So the next move to me looks like it's going to be very much to the upside very shortly. How far this can go is anybody's guess. But if we take a Fibonacci extension level from this bottom here to the recent top that we had in September, down to the bottom at these levels at around about 116, it gives us an idea that in the blow-off top that we're expecting, we should get at least around about the $1,000 mark here. And certainly the 3 Fibonacci levels are all in line with the price action above it. So it's looking very bullish with all the 3 lines pointing in the upward direction. So once again, all the assets, as you can see, there's a similar picture emerging for all of them. Finally, I'm going to have a look at one which I'd never even heard of before, but somebody mentioned it in one of the comments in the last week's video, and that's called IDEX. The main levels to look out for here would be these levels. I mean, that is a hefty fall to come back and find support. So it topped out in September from this level and has come down 78% down. So a lot of weakness in this share price, but it has found very strong support at this previous neckline here. And it seems to have given a strong bounce to the upside. And if we put the 3 Fibonacci levels, we've now just managed to get back up above the 8 exponential moving average. So this could well be on the launch pad to much higher prices now. So this may well be worthwhile holding now for the upside. And if you're looking for some levels at the top side, if we take the Fibonacci extension, we can expect around these levels here on the top side, around about the $3.8 to $4.5 mark. And currently it's at 0.3. So there's quite a lot of way to go by the looks of it from this chart. And please remember, everything is dependent on Bitcoin. Bitcoin is the train driver which is carrying all the other passengers of all the altcoins at its back. So everything is dependent on Bitcoin going to much, much higher levels. And if you look at the simple moving averages, again, the price action is well above the 3 of the 4 moving averages here, the 21, the 50 and the 100. So as you can see, most of the charts are looking very, very similar. The main narrative to take from this video really is that nothing's really changed in the last few weeks. The thrust of the crypto market is still on the upside, and we're just basically waiting for a blow off top. If it doesn't happen at the end of November, then more than likely it'll happen in December. But only time will tell. But the main thing is to hold our nerve, not get nervous, not to panic, and remain level-headed. And I'll come back to the same adage that money moves from impatient hands to patient hands. And we need to be the patient hands here. And on that note, I'll leave it for today. I hope you found value in the technical analysis. And if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions, or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.